Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with the 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
Well, here we are, Thanksgiving Eve. And we do have a lot to be thankful for. I mean, something to be thankful for. Being in America, first part. Welcome, everyone, to... Almost went on a tangent there. Welcome, everyone. Wilmington Mortgage, like I said, on this Thanksgiving Wednesday. I am the aforementioned host of this podcast, Tyler Cralle, of course, loan officer, Town Bank Mortgage, right here in Wilmington, North Carolina, talking about the top stories that are impacting rates every single weekday in 15 minutes or less. And today could be one of the lesses. Just going to throw that out there. Not a lot going on. Everyone kind of getting ready for the 4-day weekend. For most people are looking at a 4-day weekend. Not everyone. People got to be working the grocery stores for all the things that people forgot tomorrow morning when they wake up. So, yeah, not everyone gets a 4-day weekend. So I'm thankful that I do get somewhat of a 4, assuming no one calls and needs like a pre-approval or something. I'll have a 4-day weekend. And so thankful for that. But then we're also thankful that it's been a pretty good week for rates. In fact, earlier today, I thought we were going to be seeing maybe a little bit reversal of this downward trend that we've seen. At one point, I think the 10-year was up about 3 basis points. We've seen 4 trading days of about a 3 basis point drop every single day. So we're down about 12, anywhere from like 12 to 15 basis points over the last 4 or 5 days. And so I thought, okay, maybe finally we're going to see a little bit of bounce off because of the data. And that's not what happened. Rates are pretty much where they were yesterday, like maybe a little bit of an improvement. We've been flirting with that 4% threshold on the 10-year. We're a little bit below that right now. But like I said, it's pretty much unchanged from where we were yesterday. And I was pretty excited about that because we actually got some data that I thought was going to, turn the tide, because it was actually some good data. It wasn't amazing, but it was good data for the economy. We've seen kind of this drop because of concern over the labor market, over the overall economy, some weakening. And then today, we actually got some good data. So durable good orders, those rose by 0.5% in September. We're still catching up from the government shutdown. And while that's down from the big 3% surge that we saw in August, it was the second strongest reading in the last 4 months. And it was better than the 0.3% that economists were expecting. So not a horrible top line number. Durable goods, excluding transportation, climbed 0.6%, edging up from August's 0.5% increase, and was the second best month this year. And then durable goods orders, excluding defense, were up just 0.1%. Obviously a big drop from September's almost 2% gain, but still the second best reading in 4 months. So like I said, nothing amazing, nothing stellar, but not bad. It shows things aren't getting worse. They're not getting better. They're just kind of there. We're stabilizing is, I think, the good term to use. And then on the labor market front, we did actually get some positive information. Initial jobless claims fell to 216,000 for the week ending November 22nd. That was the 4th consecutive decline and the lowest level since mid-April. Continuing claims, though, did rise to 1.96 million. That's the second time that we've seen that, I think, in the last month or two. It's the 3rd straight weekly rise and the second highest level in the last 4 years. So really what we're seeing with the labor market is what Jerome Powell referred to, I think, I want to say it maybe September's meeting, when he talked about we're in a low hire, low fire environment. Now, it's not saying there's no firings that are happening. We're seeing layoffs, which I think you would include, obviously, in the firings. They're not technically the same, but I think when you say low hire, low fire, you're thinking people losing their job. So you are seeing layoffs from companies. Verizon was the last one that I saw. But you've seen some kind of big layoffs. We're seeing a little bit of, we had a good jobs report in September. But for the most part, what we're seeing is just, once again, kind of a stabilization, not growth, not really cooling, just sort of stabilizing, sort of simmering. And like I said, it's not good, but it's not bad. And so it could be seen as, okay, well, things, maybe we're kind of balancing out. And so that's why I wouldn't have been surprised if we saw a jump in rates, but we didn't. Like I said, the 10-year was right around 4%, and that's kind of where we were yesterday. We did see a slight improvement on mortgage rates. Mortgage News Daily had the 30-year fixed at 6.22%, down 2 basis points from Tuesday, and that is the lowest level since October. So it looks like the Fed cut, as we talked on yesterday's show, the Fed cut is still on the table, the December cut, I should say. There is still concern about the labor market. The continuing claims, the long-term unemployment is clearly an issue and one that needs to be addressed. But the fact that we have not seen a spike in jobless claims means that this fear about a big downturn, or at least a downturn enough that would cause layoffs, is not really there. Like, once again, you are seeing layoffs, but not the kind I think the Fed was worried about. So you're seeing concern about the labor market. We know that the economy, consumers are worried about the economy. There's no doubt about that. They're worried about prices. There is concern about the overall economic growth situation. But it seems like we're not falling anymore. And so that's why this is it's not great news. It's not even maybe even good news. It's just like, oh, it's not bad. It's just news. It's just information that the economy is, once again, my buzzword of the day, stabilizing. And so in all honesty, that's sort of the best news for us in real estate, because you don't want the economy to go too sour, because then when people are worried about losing their job, they're probably not going to buy a house. You're not going to take on that responsibility if you're concerned about your job. So a bad labor market is going to be bad for real estate. Now, on the other hand, if things are too good, then all of a sudden there's more concern about inflation. We're not only talking about not cutting rates, could we potentially be raising rates? And so that's not good. So what you want is an economy that's not going gangbusters, but you don't want an economy that's having a problem where people are worried about their job and therefore their financial situation, because that could prevent them from buying. So this is kind of a perfect situation for real estate, where people maybe aren't worried about getting fired. They're not feeling great, but they could be comfortable enough. And then with rates falling, it's like, okay, maybe we'll buy that house. So that's why this is probably kind of good for housing. I know it's such a weird way to look at the economy, because like I said, most times you'd be like, oh, you want the economy doing great. Well, yeah, of course we all want that. But in this situation where there is this worry about inflation, things get too good, then inflation's back on the table. So this is a decent environment. That's why, I think you are seeing some improvement on the mortgage side, on the real estate side. It's just a slow time of year. So I think things sort of historically are probably a little better, but it does still feel slow because it is just a slow time of the year. People getting ready for Thanksgiving, obviously. People getting ready for Christmas, end of the year. Okay, you know what? Maybe we're going to do that in the next year in 2026. You're already getting the emails, right? Like, let's circle back to that new year. So a lot of that's happening. So it's already a slow time of year, but I think activity is a little better than maybe last year or 2 years ago. And so you are still seeing somewhat of a better slow time, if that makes any sense. And then we do have some good news, at least on the mortgage side, real estate side. The FHFA, the Federal Housing and Finance Agency, announced that the 2026 conforming loan limit for one-unit properties will rise to $832,750. It is a $26,000 increase, which is funny because when I first saw that, I thought, that's a big increase. But then I was like, wait, hold on. We're already at 800. So we were at 803 before, and I should have done the math before, but I'm going to do it right now. So that's what's kind of interesting about this. So it's a so we're going to say $26,000 increase on 805,000. That's 0.3%. So when you look at it from that perspective, which is, like I said, it's 3%. It's a 3% increase, which is probably what you've seen with home prices. But because the conforming loan limit's gotten so high, a $26,000 bump seems big, but it's really only 3%. But the conforming loan limit is up. So, I mean, that means if someone is a buyer, they could buy an $858,000 house and put 3% down, which is the Fannie and Freddie minimum, and be a conforming loan. That's so crazy. What was it? Hold on. I want to see something here because I got in the business, just 5 years ago. In 2020, the conforming loan limit was $510,000. So just since I've been in the business, it's jumped by 300. So what is that? What is the math on that? So to go from 300. Yeah, it jumped 60%. Oh, man. That's just funny. That's crazy. 510,000. And now it's what is it again? 827? Now I'm forgetting. Hold on. 832. Sorry, 832, 750. 832, 750. I got to remember that number. 832, 750. Oh, man. That's happy Thanksgiving. Merry Christmas. You can buy an $858,000 house, 3% down, and that will qualify as a conforming loan. Man, oh, man. Man alive. What's that from? I can't remember what's that from. All right, you guys have a good Thanksgiving. You guys enjoy your Thanksgiving. I know I will. I might do a show on Black Friday. I don't know. Why not? I usually don't do shows on Friday, but since I'm skipping Thursday, maybe I'll do one on Thanksgiving. Have some fun. I don't know. We'll see. Well, either way, you guys have a good Thanksgiving. I will talk to you either this week or back on Sunday night. But even in the holidays, remember, as always, do not wait to buy real estate. You buy real estate and wait.